Hi, everyone. Welcome back to Inside the Crown, where we break down real experiences, real lessons, and what actually happens behind the deal. So, today we're going to do something a little bit different. We're going to start by talking with Garrett a little bit about what makes Garrett Garrett and what got him to the point in his career he is today. So, I want to start by asking you a little bit about something that I probably know a lot about, but the viewer might not. Can you tell me about early on in your career, what made you get into this industry? I don't think most kids grow up and the teacher says, "What do you want to be when you grow up?" And they're like, "Oh, I want to do mortgages." Like that's just not what someone says.
Sure.
So what was that kind of aha moment for you and how'd you roll up in here?
Well, like a lot of people in this business, I pretty much was just looking for a job, right? And I was scrolling through Indeed looking for a position, and I saw that a mortgage company was hiring for call center staff. And I was like, that looks like a decent opportunity. Let's jump into there. To your point, I definitely didn't grow up aspiring to get into mortgages. I was more of like a maybe I'll be an engineer, maybe I'll get into law, that kind of thing. I had my oldest child I had when I was very, very young, so I didn't really have time to go through 4, 6, 8 years of schooling. And when I was 22, I was kind of just floating through job after job, and I applied for the mortgage company, got the position, and realized there's a lot of opportunity, not just to, make decent living, but more important to me is to make an impact on people, really help people in one of the greatest ways that you can.
Yeah, it's kind of funny because when I got into the industry, I didn't think about all the people we'd help. I was more trying to just figure it out. And then that came later for me. And that's what's made me stay for so long is that impact and how it makes me feel at the end of the day, helping people. So let's talk a little bit about early on in your career. I kind of want to just get into why can you talk so much about everything all the time? Like, why do you have such a wide knowledge base? Where does it come from? You don't just walk into this building and know all this stuff. So I know that takes years, but maybe you can like talk a little bit about when things started clicking for you and, what types of experiences help mold and build that knowledge base.
Well, I think just like anything, repetition, right? There's the an old saying where a college professor took two groups and said, "Hey, I want you guys to make the perfect clay pot," and then he said, "I want you guys to make as many clay pots as you possibly can."
Mm.
And at the end of the semester, the one who just focused on one couldn't make a very good pot. The people who kicked out 50,000 of them, they had a lot of experience, right? So I use that analogy because here at the Crown Group, we do a lot of different transactions. And we also do a lot of, we look at a lot of applications that we can't do the transaction. And it helps us plan for helping them in the future. So, one of the ways that we acquire so much knowledge is, I probably look at 3,000 credit reports a month.
Mhm.
And that's a real number. So, I mean, you're looking at someone who I've looked at over 100,000 credit reports in my career. I've overseen over 25,000 transactions. I've definitely looked at over 10,000 tax returns. Um, so when you get that kind of exposure, the next scenario is that much more familiar, right?
Mhm.
One thing I really, really love about our job is as much as every loan's kind of similar, every loan's very, very different, right?
Mhm.
People have different credentials, different goals. And I love that challenge of taking the pieces of someone's puzzle and fitting them together. And the more that you do that, the more it prepares you for the next one.
Yeah, for sure. So, and that leads me to a couple different thoughts in my head. So, I do love how everything's a puzzle, and I don't think the average person or the consumer honestly realizes, like, how different all of it can be and how it falls into place. The second thought that pops into my mind is, when you're describing looking at 3,000 credit reports and all the experience and all the reps, it reminds me of what a doctor has to do to become a doctor.
Sure.
And that makes me laugh because I know you call yourself the mortgage doctor, and I laugh at it. And it's, is it corny? Maybe, but it's just the truth.
Hmm.
So, you went through your residency in mortgages, and that's
Sure.
kind of what we do with the employees and team members that come through our group. And it's, giving them the experience, the reps, and everything that they need to become, just like you when they grow up. So that's awesome.
Well, it's funny because, like, I didn't give myself that nickname, right? I got
Mhm.
into the business in 2012, again, started just at the bottom. I got licensed later on that year, and then I started doing loans on my own. And right around 2015 or so, I had a, small training class under me, and really any and all LOs would come to me and say, "Hey, my loan kind of fell apart here. Can you look at it?" And,
Mhm.
more times than not, I could fix it just because we'd get creative, pull different levers, look at different programs. And then someone just said it. They're like, "Man, you can just fix everything. You're like the doctor." And then it just
Mhm.
stuck. It's like Garrett Silva, MD, mortgage doctor. I don't
Mhm.
know. Just went from there.
Yeah. No, it's great. It's great. And you're all those things you're really good at helping all of us figure out tough situations.
Sure.
So let's talk a little bit about the business and what makes somebody, obviously you need to put in the reps. Obviously you need to do the work, but what makes somebody really successful in our business and like someone watching that might want to get into the industry or a loan officer who might be struggling? What are some of the things that make, you successful or any of our top producers here across country successful at their job? There's got to be some magic sauce that's just consistent throughout. And obviously, everyone has their own strengths, weaknesses, and talents that come out. But what are some of those things that we find?
So, I mean, obviously, being good with numbers and being good with people is very, very important. Can you have a conversation with someone where they open up to you and talk about their concerns? Can you
Yeah.
take their financial picture and again, kind of put those pieces of the puzzle together? But the biggest attributes that I look for in someone, like if I'm hiring the best kid at McDonald's, right, is like, how's your attitude, right? This business will chew you up and spit you out almost on a daily basis.
Mhm.
Can you be steadfast in your approach? What I mean by that is, again, this business will give you the highest of highs and the lowest of lows, oftentimes within the same hour.
Mhm.
I might have a phone
Yeah.
call saying, "Hey, Mr. Jones, I know this was a tough one, but we're finally clear to close. I'm so excited for you to get your keys." And on the flip side of the coin, I might have to make a phone call right after I hang up and say, "Hey, Mr. Smith, this appraisal came in short, your inspection, whatever. And, maybe there's nothing we can do." I always say there's really just news in this business, right? The only good news is we're finally clear to close and we're getting there and we're done. And the only bad news is there's no fixing this. I can't help you. And then the rest is just news, right? Obviously there's going to be problems that you need to overcome. And I like to make sure I'm focusing on the solution, right? You hear me say all the time, no problems, just solutions. And if I can identify the problem accurately, it helps me come to a solution that much quicker. When I'm looking at candidates and like what attributes they have, you got to have tenacity, you got to have grit, because I don't care how good you are at this job, you're going to experience a lot of failure. And if you can't overcome that, what's going to happen is you're going to have a bad conversation or a bad news you have to give, and then you'll carry that into your next phone call, and now it's almost like you're blowing up two deals instead of just one because your attitude and your approach isn't good going into that second one.
Right. Yeah. That's huge. I feel like that's what they teach my son in sports.
Yeah.
So very similar. Now we're going to talk about some of the hard lessons that the industry can teach you. And there's all kinds of them.
Mhm.
There's personal, honestly,
Yeah.
business lessons, lessons with people, lessons with deals. So what do you think's changed the most in the mortgage industry since you've gotten into it?
What's changed the most in the mortgage industry since I've gotten into it? There's a lot of different answers to that question. Some of the ones that come to mind, technology.
Hmm.
When I got in this business, e-signing was just starting to become a
Yeah.
thing. And back then we would send out UPS,
I used
and
to have to take the stacks in and scan them in one by one, and then I'd have to sort the docs. So
mhm.
I've been around a little bit.
Yeah,
Um,
and you think about printing all those docs out, highlighting where they need to sign,
it was
signing yourself. It's
It was
exhausting.
awful. Yeah, so I could probably do processing again now.
Mhm. Yeah, so I mean that's a huge thing.
Yeah.
Uh, Guidelines and programs are always changing and evolving. I couldn't tell you how many times minimum credit scores were raised and lowered. And a lot of that's dictated by what the market's doing, right? If interest rates are really, really low and lenders know they're going to be at capacity, like no matter what, they'll raise that minimum credit score because they're like, my pipeline's going to be stacked to the ceiling regardless. Do I want to be working on A paper like 700 plus, or do I want to be working on like crustier stuff like 580, right? On the flip side of the coin, when we see interest rates increase, you see them start kind of loosening their belt on minimum credit scores because they want to be at capacity, and
Right.
they know that they can't fill it with an overlay of 700 credit scores, right?
Right.
So those are some big things that have really changed. Um, when I got in the business, I was blessed to where interest rates were declining and they were relatively low for probably the first like 18 months of my career. And that really helped me and hurt me. It helped me because I was like, okay, I can do this, lots of opportunities, so on and so forth. But when rates started going up, this is back in summer of 2013, I struggled. I'm like, oh my gosh, now I have to sell an increasing interest rate. Or,
Mhm.
back then, prior to that, you got a lot of appraisal waivers. I remember thinking to myself in the summer of 2013, I was like, oh my gosh, I'm gonna have to order an appraisal? Like, this sucks, right?
Huh?
But that's just part of the business that we're in. So I
Mhm.
mean, that's also to kind of bring it all together. I think that's one reason why I stay in the business is
Mhm.
because it's always challenging me to improve. I'm someone who I can get bored with something once I feel like I've conquered it,
Yeah.
and there's no conquering the mortgage business, right? There's just getting better, serving your clients better, serving your partners better, and just becoming a better version of yourself.
Yeah, that's so true, honestly, that's probably what keeps me in it, it's constantly going, it's constantly changing, and, it's just never boring. I mean, I don't have a boring day ever, there's just always something going on, something to do, and it's always different, so let's talk a little bit about, what's something that agents misunderstand about our industry? You could take your time, but,
Yeah.
there's things I think they think on both sides and, not all of us lenders give us a great name, and I'm not saying, trying to go there exactly, but, what some misconceptions they might have when working with mortgage lenders.
I think some things that come to mind just off the cuff, I don't remember looking through this question, by the way. I think like that there's some things that we just don't have control over,
Yeah,
right? The famous, well, this appraisal came in short. This is your fault.
yeah,
Well, I really don't have control over that, right? I ordered the appraisal through a third party company. They find an appraiser in the area and then they do the job and it comes back to us. Same thing with like interest rates. I've seen more houses than ever fall out of escrow due to like inspections.
mhm,
Something doesn't go about the house or whatever it might be. So as we're waiting on that, we've got two options. We can either A, lock your rate now for a longer time, which is more expensive,
yeah,
or B, we can wait until there's a more valuable point in the process to lock your rate where there's a higher probability you're actually going to complete the transaction.
mm,
And especially recently, like the market's very volatile, right?
yeah,
So we can't really control what happens with interest rates. Especially when it comes to just overall monthly payments. When I'm looking at a property trying to quote somebody, I can look up the previous tax year's
mhm,
taxes. I can probably try to spitball what the homeowner's insurance is going to be, but those are two things that I have no control over,
yeah,
and over the last 24 months or so, we've seen homeowners insurance premiums go through the roof depending on what market that you're in.
yeah,
So I might quote someone, hey, I've done 4 transactions in your area over the last 6 months. At your price point, it was, $1,800 a year.
right.
And then they come back and it's $3,000 a year.
Yeah,
Now the customer's upset their payment's $100 higher than they thought, even though I had nothing to
dramatically
do with it, right?
yeah, it dramatically can change
So, I mean,
things.
those are 2 things just kind of off the cuff, between, appraised value and your overall client's monthly payment that a lot of times we end up having the finger pointed at us when really we didn't have a lot of control over that aspect.
Right. Yeah, that makes sense. What's a lesson this business teaches people the hard way?
There's a few of them. I'd say the biggest lesson is, to kind of go back to like what kills deals and problems and solutions,
Yeah,
the sooner you can tell someone no, the better,
yeah, I
right?
agree.
The best answer you can tell someone is, "Yes, I can do this, it's gonna go smoothly." The second best answer you can tell them is, "This is not gonna work, we need to stop the vehicle right now."
Right,
Uh, there's been a lot of situations where clients getting a gift and then all of a sudden they don't have it, or clients bringing X amount of money down and I'm staring at their bank account, they have the money. Then something came up and they had to fix their car or whatever it might be.
right.
As soon as we identify that there's a problem, we need to first see if we can find a solution.
Yeah.
And if we can't, we need to let all parties know so, they can all move on with their lives. I
Right.
think a lot of people, they're afraid to give bad news.
Yeah.
And the longer you kick that can down the road, the worse that news is to give.
Yes.
Uh, so, don't be afraid to, as they say, eat the frog, you know?
Yeah. I think the business absolutely humbles you. If you have any sort of ego, you need it to survive, but it definitely will kick you down and bring you back to earth real quick. So,
Yeah, I mean, there's been multiple times in my career where I'm like, "Do I even wanna keep doing this anymore?"
uh-huh.
Because it just weighs on you, especially
Yeah.
now. I mean, we're doing over 200 loans a month. We've got a bunch of kids running around with scissors pointed up as
Mhm.
far as our LOs go. I say that with love. And there's times where, like, an LO has brought me a file. I'm like, "Yeah, this isn't gonna work, because of
Yeah.
X, Y, and Z." And they're green, they're new, they're excited, and they ship out a pre-approval anyways. And then 3 weeks later, I'm like, I told you this wasn't going to work.
Yeah.
And now we're just trying to have all hands on deck to get this to the finish line.
Yeah.
And even when you do get things like that to the finish line, it's not a great experience. So, I always tell people you got to measure twice and cut once.
Yeah, but I will say that is one thing that we're really good at. If you bring us a client who can't get approved somewhere else or has some issues getting approved, we go through every length to figure out the way. And if there isn't a way, we let them know. But I think, we turn over every rock and figure it out. So that's something we're really, really great at.
Absolutely. I mean, it starts with just cross country as a company in general. I mean, we have
Yeah.
every product and program you can possibly think of. And then when take all those opportunities and then align them with our team, between Frank, Nick, Alan, myself, obviously you as well, we combine for over 100 years experience and probably over 100,000 closed loans under our authority. So between having all the opportunities and then all the experience, if there's not a solution out there that we can find, odds are it just doesn't exist.
Yeah. Yeah. There is a lot of experience on our team. I don't love this question. What's something younger Garrett believed that older Garrett laughs at now?
Something that younger Garrett believes that older Garrett laughs at
Like,
now
before you managed all these people and all this
is
stuff.
that I think because I just was so natural in the business, I am sometimes naive that I think anyone can do it.
I would agree with you
Um, you
100%.
know,
Yes. You love to see the, what's the words I'm looking for? Someone's potential.
yes.
You are the epitome of seeing the potential in someone, and not everyone lives up to it
Mhm.
because that's what you would do in the situation.
Mhm.
And that's honestly something that I had to realize too, is not everyone's me, you know?
Correct.
Not everyone's me. Everyone learns different, and not everyone's gonna bring the same enthusiasm and effort to the job,
For sure.
so that it can be a letdown, especially when you see something in somebody and you
I've
just
made
wanna pull it
so
out of
many
them.
bad hires in my career that's
Yeah.
probably cost me over $1,000,000 altogether.
Yeah.
Probably more than that. Frank's gotta be so mad. But, like, you're absolutely right. I have a conversation, maybe I see a little bit of myself in somebody, or I just see that I think they have potential. And again, this business takes grit, not a
Yeah.
lot of people can take the beatings like we do day in and day out.
Yes.
And that's both, at the bottom of the funnel when a transaction's going wrong,
Yeah.
but also just at the top of the funnel with people hanging up in your face, right?
Yeah.
We make hundreds of thousands of phone calls, and the majority of them aren't very friendly. Customers,
Right.
hey, F you, take me off your list, or I said stop calling me. On the flip side of the coin, you talk to enough people that it's like, oh my gosh, you just changed my life. And that kind of
Yeah.
makes that worth all the struggle. But yeah,
Yeah.
to answer your question, I definitely was very, very naive on how big of a net I thought people could land in
Yeah.
and be successful. And sometimes I'm still naive about it, right? I just have that little tug at my heartstring thinking, oh, this kid can do it.
Right.
And they probably can, but do they have the grit, the tenacity to power through the struggles?
Yeah. And I guess sometimes you just don't know who's going to thrive. We have, indicators that lead us in the right direction, but sometimes we've hired people that I thought like their personality probably wouldn't work. And then they end up just like,
Mm,
locking in and doing the job and doing a great job. So I've seen some really, great people blossom and thrive. Okay, here it is. Wow. Uh-huh. So when you were sitting there talking about, the grind and how tough it is to take phone calls and get hung up on and all those things. It started me on thinking about our business model. Our business model comparatively to other, branches within our company or even other companies, isn't everybody's cookie cutter model. I think our model is the best one. I know it has its like positives and negatives, but we make it work and we're continuing to build it. Maybe you can describe it a little bit to other people. I'm not saying you have to like give all the information, but why does that help us stay in the top 10 across country? It's a big company. So
Sure.
it makes a big impact. And also, how is it relevant to, real estate agents we work with, locally, nationally, and everything
Sure.
like that?
So, let's just kind of talk a little bit about the two different business models first.
Yeah.
Your more traditional business model in our industry is working within your own region or your own state, your locality, and you're trying to build long-term relationships with the agents or CPAs, attorneys, that are within your radius, right?
Yeah.
So it's a very relational business, which is important, right? This is a relational job.
Yeah.
Where ours is kind of a hybrid model. What I mean by that is, for one, we don't just stick to our backyard, we do business nationally. For two, while we, highly value our referral resources, and our partners, I should say, we're also a very data driven call center model type, especially on our national scale. I spend $150,000 a month in marketing,
Yeah.
mostly on like leads from Zillow, Realtor.com, people who are poking around online, and then they decide, hey, I want to hear about financing.
Mm-hmm.
So, two different versions, right? Why I think ours gives us kind of the edge to stay consistent is because, especially here in Northeast Ohio, there's a lot of seasonality. When you look at November, December, January, you see a lot of transaction amounts go down. There's not as many transactions happening. People
Yes.
don't want to uproot their family in the middle of January, right?
Yeah.
On the flip side, nationally, it helps us kind of have that consistency because yes, it might slow down in the southern states, but not as bad as here.
Nothing like here.
It also allows us to add a lot of value to our real estate partners. We spend a lot of money on marketing, and most of those clients, they don't have a real estate agent.
Mhm.
So it allows me to tap into my network, whether it's, in that locality or, in my backyard and say, hey, who do you have in, let's say, Atlanta, Georgia, that can serve this client, and now I can start handing them business, not just asking them for business.
Right.
That allows us to not only serve our realtor partners, but also create additional relationships and pockets that maybe we don't have referral partners established. So that's where I think it kind of gives us the best of both worlds. We come from a long history of refinancing. And over the last 3, 4 years, we've really shifted to be very purchase focused. That refinance history has really, really helped us because we're used to working through leads on a national level, very, very high quantity of leads.
Yeah.
We're used to doing tougher loans. And it also allows us to further service our clients that we do purchases on, right?
Hmm.
Because we understand the refinance transaction so well, we can help our past clients keep saving money. We can also help our referral agents, past clients, save money as well.
Right.
Hey, Mr. Jones, I'm my new realtor partner, Mr. Realtor asked me to give you a call. They said they did your purchase 2 years ago. Rates are probably better now. They asked me to give you a call to see if I can help you.
Yeah.
So that helps our referral partners stay top of mind as well.
Yeah. It really is like the 360 experience and retaining that client for everybody involved, which strengthens the relationships. I also think it's huge for loan officers starting off, uh, in a different model where it's self generated. Not saying you don't learn as quickly, but working leads and doing those reps, like we talked about in the beginning, like that is what really shifts molds and builds your mortgage character, and gives you everything that you need to survive and thrive, maybe a little bit quicker than starting off a different way. So,
Yeah, I mean, it's going to be a grind either way. Either you're going to call a bunch of leads that are clients, or you're going to call a bunch of leads that are agents and try to earn that relationship. Either way,
right.
you're going to make phone calls. You're going to get rejection. It's just a matter of what kind of direction can get you to the success the fastest.
Yeah. And, different personalities go towards different things. So, all right, that's great. Let's talk about some different deals, some different scenarios. Are there any that stick out in your mind that you'll just never forget them?
Oh, of course.
And I'm
In
sure there's
in
a
fact,
lot.
I could probably tell you the names of every client I ever did in, like, my first 3 years just
That's
because like, they were so
crazy.
significant, like, what kind
Yeah.
of loan I did and how it helped them and everything.
Yeah.
A couple that really stick to mind, I think we chatted about this the other day. So, I was in the business about a year. Guy says, "Hey, I wanna take some cash out, and, how much do you want? 30, 40 grand, blah, blah, blah. What's the money for?" And he was getting money to adopt twin girls. And, we were just talking about, changing people's lives and like what we do for people. And I just think about that from time to time. Just like think about the butterfly effect that caused. This guy calls me, we have a conversation. Next thing you know, he's adopting these two beautiful
Mm.
girls. And now they have a family. Like, think about the trajectory that their life went on after
Yeah.
because this guy called me, right?
Yes.
So that's a really, really special experience for me. Like, it kind of just tugs at your heartstrings. You know what I mean? Like,
Absolutely.
it's just so awesome. I
Yeah.
mean, those girls are probably almost 18 now. Like, that's how old I
And I
am.
don't think people realize sometimes, like, that relationship with your realtor, you're with them all the time, you become friends and
Mhm.
you become very close. And I feel like some customers with us, like, we have to have very personal conversations with them. Um, you're getting, financially naked with someone you don't really know, possibly. And that can be an interesting process, and it doesn't have to be something where people feel uncomfortable, and that's part of our job is to make them feel comfortable, but in doing that with somebody, you build trust, and you build a relationship, and clearly you get to know a lot about why, they're moving into this new home
Sure.
and what their goals are and plans are for the future and helping them get there. So, it is crazy, to
Not
think
to
about.
not to go off track, but, a lot of times it's a stranger talking to a stranger about the biggest financial decision they're probably gonna make, at least up until this point.
Yeah.
And a lot of times, whether it's a real estate agent or even like one of my LOs, they'll say, "Well, man, my cousin went with another lender or my friend went with another lender." And I think one thing that we forget is, again, you're financially naked, right? My
Yeah.
cousin doesn't want me looking at their bank statements and looking at how much they make and yada yada. To
Yes.
where, like, when it is a stranger talking to a stranger, it's almost like a Catholic confession booth.
Yes.
Like,
Yes.
hey, I'm in here, I'm just spilling my guts, and then there's someone who's not judging me, and they're just
Yes.
here to help. And I think that a lot of times we should not get offended, because that's probably what's going on. They're probably it's not that they don't trust you to handle the transaction. They're
Yes.
probably too embarrassed for you to see them just standing there naked. You
Yes.
know?
Yes, that's literally exactly what it is. So now let's talk a little bit more about situations where we need to tell somebody, no, no, this isn't going to work. I know we touched on it earlier a little bit. What are some of the situations where things aren't working out? Is it income? Is it credit? And I know it can be a variety of things, but for the average person watching that's worried about getting approved, what are the things that we're looking at? And, what are some situations that stick out in your head
Sure.
where, a normal average person didn't get approved in a pre-approval
So,
status?
as far as topics that we're going over and, like, pillars we're looking at, we're looking at the home they want to buy, their assets, their credit, and their income. And I always use the visualization of, imagine a car with four wheels. We got the home, credit, assets, income. And here at Cross Country, a lot of times, if you don't have all four wheels going, we can still get the loan done, right? Just because you have a flat tire doesn't mean we can't change it and keep you moving.
Mm.
And then sometimes, even if you have two flat tires, we might be able to fix it. But, we're looking at, what kind of home are you buying? Like, what kind of condition is it in? Is it a standard single family home? Is it a condo? Is it a manufactured home? Those all can have effects on what kind of financing that you're eligible for. Obviously, income, is it consistent? Is it verifiable? Those are two big words that I'm looking at when I'm pre approving someone.
Mm.
Your credit, we're not just necessarily looking at your credit scores, we're looking at what kind of derogatory credit do you have? How many trade lines do you have? We're looking at, what's your overall history look like?
Mhm.
So those are big factors. And then obviously your assets, the more assets you have, the better. I always say that between the three, or sorry, between the 4, assets is probably the one that I can fix the easiest, right?
Yeah.
I can't just go back the last 2 years and get you more income, you know?
Right.
I can't just change the property that you're buying into a different kind of property.
Right.
When it comes to your credit, yes, I can give you tips and tricks and do like simulators, but I can't just fix that right out of the gate, right? When it
Yeah.
comes to assets, there are other levers that we can potentially pull. Maybe we look at down payment assistance. Maybe we look at getting a gift. Maybe we look at if you have, an asset that's not liquid, maybe you have a second car that you drive, maybe we look at selling it,
Right.
things like that. So those are definitely things that all factor into your deal. And assets is probably the easiest lever to pull. I do at least 80% of my work at the point of pre-approving someone.
Right.
So the majority of the time, if I have to tell someone a deal's not going to work, it's at the very top of the funnel before they've even started looking at houses. And, I always say, give them the 3 R's, right? The first R is reason. What's the reason I can't do this right now? Second R is resolution. You're like, hey, here's what we can do, the actions that you can take to get you ready in 30, 60, 90 days. Sometimes it's a year or two. It just depends. And then lastly, I ask for a referral. Hey, if I gave you at least good resolution and you had a good conversation, send me anyone else that might be buying a house because I'll treat them as honestly and ethically as I've treated you. Right.
Right.
So that's the biggest thing is, again, like I said earlier, if there's a reason a deal won't work out, let's identify that as quickly as possible.
Yeah.
And it's a tough combination between leaving no stone unturned and making sure I've looked at every option there is, but also not trying to force a square peg into a round hole either.
Yeah. I agree. It also just reminds me of the other day I was on a call with a potential buyer, and I had to talk to them about the analogy. You have so many good analogies. You really do. I love them. But how you would say if you go into a doctor's office to figure out what's wrong, you can't unless you get the information, the vitals, some labs done or whatever. And a lot of people will come to us and they just want us to spit out the interest rate.
Mhm.
And there's just so much that goes into figuring out what someone can be approved for. And I had to guide them through that analogy, and it really clicked for them. I'm like, I can't serve you best and give you the best information unless I collect, the data for the application, essentially. That's
Mhm.
going to give me everything to give you a full picture, either pre approval or advice and guide you, to get you where you want to be. So, in doing that, it made them take the guard down, understand why we have to have these personal conversations. And, maybe we can't approve them right now, but we've built out a plan that they can follow. So, yeah,
Yeah, and
it's
whether you
it's
use the
huge.
doctor analogy or sometimes people are better with, like, the mechanic, like, I can't just drive up to the garage and say, "Hey, my car's making a funny noise. How much is it gonna cost me to fix it?"
Right.
Like, they've gotta look under the hood,
Yeah.
Or I can't go to the dentist and say, "Hey, my mouth hurts. What do you think the problem is?" It's like, "Well, open up and let me take a look?"
Yes. Yeah. I like the dentist one too.
So,
Yeah. I'm going to have to write all of them down. They're all so good. So, because of some of these situations, and we talked, a little bit briefly earlier about cross country, the products that we offer here, and there's a lot. There's over 120 loan programs here. We don't use them all every day, but they're in the toolbox in case we need to pull it out. Let's talk a little bit about some of the more non-traditional products people aren't used to and what makes, cross country a place to start and figure out what to do from there because we're not like cookie cutter. We
sure.
we do a lot of different things.
Yeah, I mean, anyone out there can do FHA, VA conventional loans, right? What sets us apart is we have very little to no overlays on just your standard stuff, right? We can do a lot of even VA loans that other people can't do because we go strictly by the VA's guidelines. We don't have any like credit score overlays, but when it comes to this, like your more abstract products, we have pretty much every down payment assistance option you can think of, whether it's a national, program where it's almost like a mini second mortgage
Mm.
to a lot of the state bond stuff where you get like grants or silent seconds. Those really help people with limited funds. Folks who are self-employed, we've got a lot of non-QM options where we look at your bank statements and the deposits. We look at if you're 1099, how much is your 1099, as opposed to looking at your taxes and having all those write-offs affect your overall income.
Yeah.
Probably the best part about that is because a lot of lenders offer that as well, but ours are right here in house. It's our own money, our own portfolio, our own guidelines. So it allows us to really do some common sense underwriting when it comes to those situations. Obviously, there's like set guidelines we need to follow. But if, let's say, they want me to put down 25% and the client's got 20%, I can ask for an exception on that.
Yeah.
And, as long as I have some kind of other compensating factor, like, hey, maybe their credit score is a little bit higher, or maybe their debt ratio is really good, or maybe they have extra assets or reserves, right? Those can really help compensate for me asking for an exception over here because I got strength over here. So
Yeah.
I think, company average is 35% exception. I stretch the taffy really thin.
Yeah.
I bet you 75% of mine that fall in that bucket, especially with the DSCR investor loans.
Yes.
I get an exception on almost every single one that I run into.
Yeah.
The DSCR stands for debt service coverage ratio, and it's a business loan, right? So it's for investors who have like multiple investment properties or at least one.
Yeah.
Well, I've been running into a lot of like, we'll call them younger or first time investors
Yes.
where they might not have home ownership experience at all. Well, I can often get an exception because they have money that they can put down, more, or they
Mhm.
have significant, high credit over 700, 720. So I think that in the last 2 months alone, I've closed 4 DSCR loans for people who had no homeownership experience whatsoever.
Which is insane
I actually did
because
one for a football player
y
that played for the Raiders.
oh, that's
Yeah,
crazy.
pretty cool.
Yeah, it's crazy, and a lot of people think, like, those things aren't possible or they talk to whoever, and you really just don't know until you kinda dig through everything, and like we said earlier, if there's a way to figure it out, we're gonna figure it out.
For
So,
sure.
yeah, that's great. Let's talk a little bit too about, the point of entry for some people, homeownership feels, out of reach. What are some of the ways we open doors for those people to get into a home?
I mean, especially for the first timers, I feel like one of the barriers that they think is their down payment, right?
Mhm.
Obviously, there's that oldest time myth that you have to have 20% down. I think that people are starting to realize more and more like 3 to 3.5 is okay.
Yeah,
Uh, like bottom line is if you have a decent credit score, when I say decent, I mean like over 600, over 640,
yeah,
and you've got a good job where like you can support the payments, I can typically find a way to get you in that house,
yeah,
right? Whether it's using a state down payment assistance or more of a national larger scale down payment assistance. We do a lot of them. I mean, last month, or I should say this month, we're still in May, we did 22 down payment assistance out of 180 loans. So I mean,
right.
they're 10% of our business,
Yeah,
right? We do a lot of them. And I think that's probably one of the biggest mental barriers that people have is I don't have enough money to buy this house.
yes,
I did a clip last fall about how you could get into a house for cheaper than you can get into apartment,
yeah,
uh, for less money out of pocket and less money per month. So I think that's probably one of the biggest things that people think that they're not ready for is they don't have any money to put down, which that's usually not the problem.
yeah. Oh, that's great. And I think it's good to just talk about it more so, people get nervous to talk to us. And yeah, I just even had a lady the other day say, I'm so sorry, I'm throwing all this on you. And I'm like, no, give me everything you
Yeah.
got. Give me everything you got. Give me all the information because then I have puzzle pieces to work with,
Mhm.
like we talked about earlier. So that's great. All right. So let's talk a little bit about what makes a deal feel strong, whether that's how we structure it, how we work with the agent, when it's, delivered to that seller. What stands out in deals? How are we structuring things different? And what are agents doing differently?
Sure.
Strong agents, how are they winning those deals? Are they working with their lender? Are they talking with their listing agent? What all goes into that? Is it like they wrote it down and then they sent it in and they're just gonna, cross their fingers?
I mean, that's a multi-answer question as well.
Yeah.
I would say starting with the listing agents is they're having, especially right now in this market, they're having a very realistic conversation with the seller, right?
Mhm.
Hey, Mr. Seller, your house might not, and it might, but it might not sell for what it would have in 2022, right?
Right.
Or, hey, you're going to have a little bit less buyers coming at you. So, like, let's make sure that we have our house as spick and span as possible. I talk a lot about potentially having the listing agent have the seller get an inspection
Yeah.
because what you don't want to do is have your house on the market, you take one of the bids, they get an inspection, then they start nitpicking at it,
Yeah.
right? So I think that's a big deal. I think also understanding, I don't want to say how desperate, but like when does your seller need to have this done? Have they already moved out and now they have two payments weighing down on them?
Yeah.
Um, are they building a house, or are they buying a house that they need maybe a longer contract time on? Uh,
Right.
and then likewise with the buyer's agents, a lot of the similar things, right? Hey, how quickly, like, how desperate are you to like get into a new house?
Yeah.
Is your lease coming up due and your landlord's going to double your rent or make you sign another one? Are you living at mom and dad's house so you can kind of be a little pickier?
Yeah.
And then likewise, you know, what is your what how open are you to like what the condition of the home is?
Mhm.
Like, are you kind of handy and you're okay with something that maybe needs a little bit of sweat equity elbow grease? Are you looking for something turnkey? To circle back to the products and programs that we offer, we have a lot of great renovation loans, so there might be a beautiful house for a family, but this wife is like, man, this kitchen's from 1970. I just can't do it like this, but it's going to cost us $50,000 we don't have.
Yeah.
Well, a lot of times we can do a renovation loan, get them the kitchen they want with the price and payments that's affordable to them,
Right.
which can be super beneficial. Same thing with like, hey, we're just not finding any inventory in our market. Maybe we should look at building. Well, we
Mhm.
have a whole team for construction where they will take your file from cradle to grave, and all the funds the loan gets funded before a shovel ever hits the dirt. So those are some options for clients that are having a tougher time. I think when push comes to shove, the biggest thing that can help all parties win is communication,
Yeah.
right? Have the buyer's agent speaking with the listing agent about a lot of the things we just discussed. Hey, here's the concerns that my client has. Here's the kind of financing my client's doing. What kind of timeline do your sellers need? And then also getting me involved as well. Right now in the current market, with just what interest rates have been doing, and where all the dust is settling,
Yeah.
I might have a really great client who can put down 20%, has a 780 credit score, and looking at their pricing, it's actually cheaper to go FHA. So it's
Yes.
like I've got a great cookie cutter client, and just having that FHA on their pre-approval can hurt them.
Yes, and I find it mind-boggling, and I feel like I run into agents all the time that are asking me like, "Well, why are the rates better on FHA, or why is that better?" And I'm just floored at how much they don't wanna see that on an offer.
Sure. Well, and that's where, I not every time, but I almost every time before we make an offer, I'll have a three-way call with the buyer's agent and the listing agent. Because then we're all on the same page, we're all working as a team,
Right.
and I can have that conversation of, hey, look at these guys have great credit, they've got plenty of money, but because of where interest rates are, FHA is a better deal.
Right.
I'm looking at your home that you're listing, it looks beautiful. A lot of times people don't take FHA offers because they think that the appraiser will be more, strenuous on it.
Right.
These are the things the appraiser's looking for, chipped and peeling paint, hand railings, up and down stairs, whatever, cracks in a window. Like,
Safety issues.
yes, like I'm looking at the pictures, I don't see any issues. Obviously, you take really nice pictures so that way people come see the house.
Sure.
Do you foresee any of these issues coming up? No, I don't. Okay, great. Then this is probably going to be just fine.
Right.
If push comes to shove and we really have to, we can take an FHA appraisal and make it a conventional one. But what we don't want to do is take the conventional appraisal and try to make it FHA because there's extra stuff and extra costs.
Uh-huh.
So having that conversation with all parties up front can just make a lot of clarity, right?
Yeah.
As opposed to confusion.
Yeah. So, gotta make sure we're all working together and the lines of communication are open, and I think if more agents are that way and communicative to everyone in the transaction, including, us, the lender, uh, it really changes the game for our clients, and that's what's most important.
Yeah, and to kind of touch on like, because I get that question a lot too. Like, this guy's got great credit, they're putting down money. Like, why is FHA cheaper? Well, you look at FHA as an insured loan, right? It's backed
Mhm.
by the government.
Yeah.
And a lot of conventional loans are insured as well. If you're putting down less than 20%, but the conventional loans get private mortgage insurance.
Yeah.
Versus, FHA, that's done by HUD. So if God forbid the economy falls apart and all hell breaks loose, like, for all we know, a PMI company might go out of business. It's
Right.
almost like a Geico or a State Farm or
Yeah.
whatever, right? You actually saw State Farm, their credit rating went down about a year ago because of all the stuff that happened in LA, all those
The
fires.
Palisades.
Yeah, they were
Yeah.
they were too heavily insured in that area, and I don't wanna say it bankrupted them because you still see the commercials and stuff,
Sure.
but it hurt their liquidity,
Didn't
you know?
help.
So similar things like that can happen with private mortgage insurance companies. So overall, there's much less risk with an FHA loan from a lending perspective because if for whatever reason FHA can't pay me, we got bigger problems, you know?
Right. Okay. So let's talk a little bit about real estate agents again, kind of segues into this topic and, their knowledge base on, mortgage loans and the finance side of it. I know they get a book this thick that they actually read
Sure.
to get their license. So, what's going to separate the average agent or a newer agent from someone who's seasoned and has done a little bit of homework or has gotten a little bit of mortgage education outside, potentially from attending one of your classes or
Sure.
something else, or just having a mortgage lending partner that they could call or text at any time to get information on? What are like the, things that they should know? And what are some of the, classes and topics we offer that can help bridge that gap for them?
Yeah, no, that's great. So I mean, I think the second part of your statement is probably the most important.
I ask 3 questions within 1, I know.
It's all right.
Yeah.
So I think the biggest thing is having a lender you can lean on to
Mhm.
ask the questions.
Yeah.
It's not your job to know every little thing there is about mortgages.
Right.
It's your job to have a partner that you can depend on that can help you with those. Obviously, it's important to know like what questions to ask so you don't completely waste your time.
Yeah.
Not that they're trying to pre-qualify or pre-approve somebody, but if I get a phone call from a client that wants to go see a house, first things first, don't take them to a house without getting a pre-approval. You're wasting everyone's time. And more important, even if that client is pre-approved, they might not have a payment that they want, so like let's make sure it's
Right.
both affordable and ideal for them.
Right.
But good questions to ask are, do you know what your credit score is? Ballpark. Most clients say they do, but maybe they don't.
Yeah.
Uh at least what their mortgage credit score is
I
going
was
to
gonna
be,
say, they look at maybe a Credit Karma or something like that online, and
which
it's
won't
not
match up.
necessarily what we're looking at.
Yeah. Some things they can definitely ask is like, do you know how much you plan on putting down? Both as a dollar figure and a percentage. Some other things that they might want to ask is like, tell me about your, job history. Have you been on your job a while? Other than that, though, like it's not an agent's job to try to like qualify a client.
Right.
It's their job to make sure that they're a serious buyer that actually wants to buy a home
Mhm.
and that they're a qualified buyer that can buy a home. So, I mean,
Yeah.
I think that it would make sense if I'm an agent and I take a phone call. Oh, that's great. Yeah, I can definitely try to show you 123 Main Street. Have you been pre approved yet?
Right.
No, I haven't been. Okay, well, let me just ask you a couple quick questions and I can, connect you with my lender who will take really good care of you really quickly and efficiently.
Yeah.
Hey, do you know what your score is? Are you planning on putting anything down? Blah, blah, blah. And then hand them off to the lender, right?
Right.
Just like if I had a client who said, hey, I like to see 123 Main Street, I wouldn't just so
Try
go
to
go
figure
show
it
them the
out.
house, you know what
Yeah.
I'm saying? Right.
Right.
So that's where it's important that we work as a team. You don't see a point guard trying to post up Wemby in the post. You,
Yeah.
you got to stay in your lane and play your position to your best ability.
Yeah. That makes sense. So, what is a great agent gonna do before writing an offer? Like, what is gonna go through their head, or what are the activities they're going to perform, or who are the people they're gonna talk to outside of, "I know everything. We're gonna write this offer. We're gonna send it in."
Sure, sure. So a lot of things that on the buyer side, again, you got to have a conversation with the listing agent. Where are the sellers at in regards to like timing? Like again, how quickly do they need this transaction done? More times than not, they need it done sooner, right?
Yeah.
But there's going to be some times where it's like, hey, the seller needs to stay in the house for a little while.
Yeah.
Well, instead of just doing a 60-day close, maybe you can look at structuring it to where we can close in 30 days and do a rent back.
Yeah.
And now the seller gets all their funds before moving day.
Yeah.
That can really help alleviate a lot of stress from the transaction. So yeah, having a conversation with the listing agent's important. Talking with your buyer about like, what kinds of pros and cons about the house that they like. I had a house down in Key West a year or so ago that I sold, and this buyer did probably 3 different inspections before they even made an offer. They
Wow.
inspected the house, they inspected the pool, they inspected all kinds of crap, which I didn't care. They were paying for it, you know, and
Right.
when they finally did make me an offer, I knew it was really serious because they did do due
Right.
diligence.
Yeah.
So I'm not saying that it's normal in this market to have your buyer do inspections before, you know, making an offer. But I can promise you as a seller, you know, some people might be like, well, that's kind of silly. We're not even under contract. But it definitely shows you're serious about what your offer is going to be.
Absolutely.
So I would definitely, if I'm a buyer's agent, I'm trying to have them take my offer seriously. It's like, okay, let's talk with the listing agents, feel out like what those sellers really need, like what those hot buttons are that can help me win that deal.
Yeah.
Let's talk with our buyers about what kind of concerns they might have just from the initial walkthrough of the house. And then also let's talk with the lender about, you know, where's their payment going to be. You know, I talked earlier about homeowners insurance. You should definitely get a homeowners insurance quote before you make an offer on a house,
Mhm.
because I can put whatever number we want to agree on.
Sure.
But if, you know, if we're putting in $1,500 a year and it comes back at 3,000,
Right.
that might tip the scale to where you don't want to buy that house anymore.
And another thing is, we're essentially and should be having a conversation with those agents up front when we approve a buyer, the deal's tight, or if they're going to need seller concessions to make the deal work or something like that. That should be communicated long before, they're stepping foot into a home. So, I love when agents, when they're writing an offer, they message me and we kind of make sure that we're on the same page and that everything's going to work out how they write everything in. So awesome. So, why are some agents because you hear that a lot have fallen off over the last couple of years. And why do you think that is? What do you think's shifted not only in the market, but what are some agents that are doing differently that are still in it to win it?
You know, I think that's both sides of the coin. You see a lot of LOs fall off,
Yeah,
right? I think a lot of times people see successful folks in the business, whether you're in the agent side or the lending side, and they think, "Oh, I want to do that because they're making all this money." And I love when they're like, "Agents have so much free time." Like,
sure.
they do not have free time. You're crazy.
Yeah,
But I think that's a lot of it. Is that again? We talked at the very beginning about grit, tenacity, attitude. Like, how many lumps can you take? Fall down 7 times, stand up 8. And you see some agents that get into this and they don't know what they're biting off, and then they start chewing and they're like, "Oh my god, I'm choking on it," right?
yeah,
So that's probably the biggest thing is they see this big shiny number that a lot of, the top 20, top 10% hit,
yeah,
and they think, "Oh, I can go do that." And then they come in and they don't get the right mentorship. They're not on a team. They don't know how to take the next step in their career, and they don't get the guidance that they need, and so then they get frustrated and they leave.
yeah. I think it comes down to a lot of like daily activities and daily practices to like keep and maintain your pipeline and build a client base. And I just feel like not many people outside of the industry really understand uh, what that takes to build. Okay, so this was great. I think we covered a lot of information, but we've run out of time for today. Make sure you follow Inside the Crown for all your mortgage information, and we'll see you on the next one.